Fox Market Minute for Friday, August 28th. And I'm looking at the S&P 500 here. And today's point is that I believe the easy gains have been made off of the bottom. And what's going to start to happen now is it's going to be a little bit more difficult for the S&P, or for that matter, any of the index charts, to continue clawing higher. So if you remember earlier on this week, what we talked about was the fact that there's three different ways that the chart can go from here. Either we end up with a V-bottom, or we get into a very large volatile consolidation pattern from there, which can either break out to the upside or eventually break to the downside, a la 2008, right? So any of these three things can happen. So what we have to delineate between patterns 1 and 2 and 3 here pretty soon is whether or not the price continues going higher. And some of the levels that we're going to look at are actually being hit right now. You can kind of see this descending trend line, which really set up the lower bound for this broadening pattern that we saw starting around in the June timeframe or so. Okay, is now overhead resistance, as well as being set up with the important 2000 level. So that's round number resistance right there at 2000. So it's not surprising we're seeing a little bit of a pause right now. Now, some of the other things that we're going to be looking for are really more fib related from here. This is where fib retracements come in, to be very, very handy to analyze what's going on. We can see that the price has bounced up to about the 50% fib retracement of this entire swing down. So this is a very common place for the price to find resistance. So we do have the confluence of resistance between the trend line, between round number resistance at 2000, as well as the fact that what caused this whole move down has not been really necessarily fixed yet. So if we see the price start to rise above the trend line, above 2000, and especially above this 61.8% retracement, then I think there's a good shot we could see a V-bottom move. Now, the next level that we're going to be watching for here is probably best if I pull this out a bit, and what I'm going to do is bring out the consolidation pattern that we've been seeing for a long, long time before it broke down below that. And that resistance level is going to be somewhere between 2040 and 2050 or so. So that represents the bottom of the pattern. So again, the overhead obstacles are about 2000, about 2020 or so, 2015 to 2020, and then 2040 to 2050 or so. So we're going to watch to see how that happens. Now, if the price just outright pulls back down again, then I would say there's a very good possibility that we're going to be in scenarios 2 or 3, which is that, several months of this crushing volatility coming up, very similar to what we saw in 2011, as well as early on in 2008. Now, what we're doing to trade this right now is we sold pretty much at the bottom here. Once we saw the capitulation showing up on Monday, we sold into that nasty move, and we have positions that are down here effectively in the 1500s for the month of October. And what I also did was took the strength into today at resistance to position October call spreads above all-time highs at about 214 on the spiders. So if we do end up with a V-bottom, those will certainly come under heat, but I made those positions smaller, so we have an unbalanced iron condor right now for the October time frame. By doing so, we end up with a position that's literally, this is about over 500 points wide iron condor. So hopefully that's enough range for us to work with for the next 6 or 7 weeks or so. Okay, that's it for today's Market Minute. Have yourself a great weekend, and I'll see you back here on Monday. Take care, folks.